space, LVMH, the parent company of Louis Vuitton and other big brands, has reportedly made a bid to acquire Tiffany & Company.
In November 2019, news came out that LVMH Group wanted to acquire Tiffany at 14 times their forward EBITDA, essentially meaning what their profit will be in 2020, expected profit, and multiplying it by 14, and that would be the price they would love to pay to acquire Tiffany. Now, they wanted to do that because Tiffany is a very, very strong name. Although LVMH Group already has a huge luxury jewelry brand called Bulgari. You already know about it, right? You know, so many women wear Bulgari in the West, and Bulgari also does watches, etc. But Bulgari is a very, very strong name in the world of jewelry. They own it, but they still wanted to acquire and expand their reach in hard luxury. Hard luxury is basically jewelry and watches. And at the same time, they also wanted to do it because, you know, the expectation for the jewelry market to continue to grow at 7% plus on an annual basis was very, very strong. Bain had already written a research that this market will continue to grow at that pace, which is why LVMH Group wanted to acquire Tiffany. Now, you must be wondering, why am I talking about LVMH Group and Tiffany? Look, this whole story was all about hard negotiations, running business a cutthroat way, and at the same time building and growing businesses inorganically. LVMH Group has acquired many brands in the past 30 to 40 years, and that's how Mr. Bernard Arnault, who is the owner of the LVMH Group, well, he owns like 35% voting rights and 43.5% equity stake in the LVMH Group. So he is the real boss, and that's how he runs this business. But at the same time, it's also important to understand the 6 most important principles by which he leads this organization. 1. Sustain savoir-faire. 2. Synergies. 3rd, vertical integration across the whole firm. By that, what I mean is integrating back-end operations, logistics, and distribution, etc. 4. Decentralized organization. 5th, organic growth, and on top of that, acquiring new companies. And the 6th, balance across business segments and geographies. All these 6 principles will keep coming out through this story, and you will actually see that. Now let's understand, why would LVMH want to buy Tiffany? They already have Bulgari, right? Here are the reasons. Tiffany runs its own diamond polishing and cutting business. So the vertical integration thing, check. Tiffany is an American brand. They have huge presence in the US and the rest of the world as well. So the LVMH gets an opportunity to rebalance their both business portfolio and revenues more towards the US. And at the same time, Tiffany also wanted at that point in time to open the branded stores in China. So the point about balance across business segments, check. Now let's understand why Tiffany would want to sell to LVMH. See, the thing is, Tiffany has been an independent brand, very successful for decades. Who doesn't know the whole thing of diamonds are forever, and the Tiffany color, and the Breakfast at the Tiffany, which was a celebrated movie. But at the same time, people who own Tiffany, they would want to capture greater growth. This is a world where people are spending more money and they want to access luxury. And Tiffany wanted to do that. For that, they want a group or a home with deeper pockets so that they can really expand aggressively. One of the competitors of the LVMH Group, the Richemont Group, again, a massive conglomerate across luxury, both hard and soft luxury, owns the brand called Cartier. Cartier is a brand with a history of 200 plus years, beautifully crafted story, and amazing product. And Cartier gets access to the deep pockets of Richemont. If Tiffany wants to do that, They want to get to a home where they can actually do the same thing. Plus, people who own Tiffany's, the investors, the promoters, they've been running this business. Many a times what happens is businesses tell themselves, look, it's time. I want to do something else. I want to take a break. I want to cash out. And when you think that, you always want to go to a bigger home. And who would buy Tiffany at $15-16 billion? No one else, right? Other than a big conglomerate where there are synergies, where there is a strategic play. Otherwise, a private equity group could come and buy them, but typically private equity groups buy companies that are in trouble. They break those companies. They go for heavily levered transactions, take massive loans like to the tune of 90% and give only 10% equity, break the company, remove the management, bring in new management, etc., etc. It can get a little messy, but for a company which is like the Tiffany's, very progressive, very profitable, and very successful, they don't need to go that route, which is why if they want to sell, they have to sell to a strategic buyer. In this case, the LVMH group. And the other thing Tiffany looked at was, if this deal were to go through, Bernie Arnault was agreeing to provide capital for the upgradation of Tiffany boutiques, launching new boutiques, etc. Discussions ensued, negotiations happened. Final price that LVMH Group was ready to pay to Tiffany's acquisition was $16.2 billion, which was actually a 16.3 times EBITDA multiple. Now that is what happened, and everything was going all right. But remember, all of this was happening in November, December 2019. What was happening at the same time? COVID. COVID was already extending itself thanks to our neighbors. The thing is, in January, February, COVID had already started making presence, that too at a bigger scale globally, and businesses were starting to see the effects. There were lockdowns, massive lockdowns across the globe, and the effect was seen not just on the luxury industry, but across industries. Now, at the end of the Q1 of calendar year 2020, an amazing drama started to unfold, and that was the drama between Tiffany and LVMH. But before we go there, let's see how the pandemic and the lockdowns had affected Tiffany. Let's understand, 94% of Tiffany's revenue, 94% came from in-store sales. Second, 20% of Tiffany's revenue actually came from people who were traveling either to Europe or to the US. Okay, so these are huge numbers. But what happened during the lockdown? Things were shut, stores closed. So it had a massive impact on Tiffany's top line, which is the revenue, and of course the profitability as well, right? Because the costs are sticky, and if you do not make revenue, then the costs remain to a greater extent. So the margins also plummeted. And the effect of all of this was seen in the results of Q2 calendar year in 2020. Now this was an opportunity for Bernie Arnault to be who he is, a massive negotiator, an eagle, somebody who sees an opportunity and seizes the opportunity. Bernie Arnault wanted to open many new stores of Tiffany in Europe. See, they are very big in Europe. I mean, they are big globally. I'm talking about LVMH. They have so many stores in Europe and deep relationships with all the real estate owners in the prime properties. When they wanted to open new stores of Tiffany, they knew that they could get really cool real estate rates. But everything went awry because of the pandemic. Now, they got together, the management of LVMH, and they started thinking, how can we pull Tiffany into a renegotiation? Tiffany was not interested. They said that, look, you have already given us an offer. We are not interested in renegotiating. But LVMH was hell-bent on bringing them back to the table. So let's continue to understand the drama that unfolded. In September 2020, the CFO of the LVMH Group released a statement saying that the LVMH Group has to hold off negotiation and this deal altogether. What they gave as a reason was the following. In that year, the French government and the Trump administration were having a bit of a problem relating to the taxes levied on the luxury products coming from France. They gave that reason. Tiffany released a statement saying that the LVMH group is hell-bent on doing and using anything that will mean or result into this deal going awry or being killed. Now, this continued. Then what also happened was Tiffany went ahead and filed a lawsuit against the LVMH group in the state of Delaware in the US. LVMH group saw that, of course. What happened was the LVMH also countersued Tiffany. They said that the mismanagement was really bad. They said during the pandemic years, when the brand was hit, Tiffany management cut costs in operations and marketing, which was adverse for the brand Tiffany. They also said that why did Tiffany management agree to 100% disbursement of net profit for dividend? That money should have been kept. These were some of the reasons that LVMH came forward with, saying that the Tiffany management did not do a good job, and hence it led to an adverse effect on Tiffany revenues, so on and so forth. And the terms of this engagement was such that if there was any adverse effect on Tiffany's management and revenues and operations, then LVMH could actually walk out of this agreement. Now, this whole thing continued for months and months. See, the thing is, this is something I've already stated earlier. Tiffany wanted to sell and LVMH wanted to buy. But when you are sitting on a negotiation table and when the situation is such where you can actually just feel around and see if there are things that you can hold on to and figure out a way to reduce the price, you try and do that. LVMH Group was already giving a massive price to Tiffany. Through all of these negotiations, what eventually happened was both of them got back to the negotiation table and Tiffany agreed to a buying price of $15.6 billion. Now you might say, hey, you know what? It was $16.2 billion earlier, and now the final price they agreed to was $15.6. Look, the reality is LVMH Group ended up saving close to $450 million, taking care of all the fees, etc. It was a massive effort, but $450 million is huge cash. Do not look at it in relation to or as a percentage of $16.2 billion. Look at it in isolation. It's still $450 million, right? So this is what the whole story of the Tiffany and LVMH acquisition is, where LVMH Group acquired Tiffany and a drama unfolded. It was really, really interesting. Even, when you want to study investment banking and how deals are done, how negotiations are done, this is a very, very good case study. Now, from a banking point of view, it's very important to understand how these deals are structured. $16.2 billion, so let's say after the renegotiation, $15.5 billion. The fact is, LVMH Group is a French name, okay? So their reporting and their numbers are in Swiss francs. But at the same time, Tiffany is an American name. Their numbers are in US dollars. When the LVMH Group wants to acquire Tiffany, they have to pay them and their shareholders in US dollars. They definitely had a lot of cash on their balance sheet, which is the LVMH Group. So part of it was to be cash, but then the other part was to be with issuance of new bonds, essentially paying through debt. Now the question is, where do they issue that debt? That debt has to be issued in the US because, as I said, they have to be the investors and the share owners of Tiffany have to be paid in US dollars. Now, when all of this happens, you issue debt, when you decide that this is the price and this is how we are going to structure the deal, this is how we are going to bring in money. From that point to the time when you actually pay, interest rates, exchange rates can move massively. And to counter the effect of the exchange rates and the interplay between two currencies, you have to do a lot of hedging, etc. So it's a very complex play, and there are people with highly specialized skills who get this done, the bankers, etc., the lawyers. But on top of everything, my whole interest is in sharing with you the interesting play, the emotions, the negotiations, there's so many things that unraveled in this whole story of Tiffany and the LVMH Group. Ultimately, Tiffany is a part of LVMH Group and they're doing fine. They've already grown massively, and that's what Mr. Bernie Arnault really wanted. He knew it. He's done it so many times already, and he knew exactly how it will unfold. Tiffany has already added tremendously to the LVMH Group top line, rebalanced the whole portfolio towards hard luxury, which is jewelry and watches, and also resulted into tremendous profitability, that is the operating profit for the LVMH Group as a whole. There you go. Hats off, Bernie Arnault. This is the LVMH and Tiffany story for you. Thank you.